It is time now to talk about your money once again, and we've seen some big swings in the stock market recently. So is this volatility good or bad for investors? Well, thankfully, here to break it all down for us is certified financial planner Jeff Massey. Good morning, Jeff.
Good morning.
Great to have you here. You know, I think a lot of us have some fear, some trepidation with regard to the stock market. We don't know everything about it, so when we hear the word volatility, we're not really sure what to think. So is it good or bad? Thankfully, you're here to shed some light on this.
Well, it depends on which side of the coin you're at, really, when you look at the volatility.
Right.
And when you look at volatility in a general sense, it can be very good for you in the earlier stages, like when you're saving, because as the market goes up and down,
right,
you're consistently investing. It's called dollar cost averaging. So think about it. As the market's going down, each month you're buying more and more shares, say in your retirement plan.
Right.
Well, when it hits the trough and comes back up, you have more shares in your bucket, as I use highly technical terms, in your bucket of money, so it comes up faster. So it helps you. But when we get to the retirement stage, well, then it's reverse dollar cost averaging, because now you want to take out a certain dollar amount from your account to provide for your monthly income. Well, if the same thing happens and the market goes down, you have to sell more shares to get the same income out. So it's important to be more concerned about volatility and the impact it has on your balances once you start the decumulation phase.
Right. I think so many of us, we hear, oh, how is this X, Y, or Z, A, B, or C going to affect the market? How is this going to affect me directly? It's my money. I want to be careful with it. I want to make the right decisions with it. So when things happen within the news, we think, how is this going to affect me? Which leads us to yesterday's news.
Yeah, exactly. You know, the president pulls out of the Iran deal, and most of us would think, all right, there's going to be volatility, market's probably going to dip, oil stocks are probably going to tank. What happened? Market goes up, oil stocks go up, everybody's going, what happened? You know, why did this happen?
Right.
Because it doesn't make a lot of sense. So it's difficult in the market to try to make total sense because it runs on emotions a lot more than it does on facts, believe it or not.
You know,
the irony.
Absolutely, and I like to say, you know, the stock market is a lot like life. If we can just maintain that balance, sort of that even keel nature, it's going to go up, it's going to go down. You've got to be committed in the long run, don't you?
It's really about that long-term commitment when it comes to your money. As you look at retirement planning, the closer you get to retirement, the more important it is to hold on to your money and preserve. So we have a bias towards preserving assets to avoid the volatility, because we never know if that volatility is going to be temporary, up or down, because research tells us that the big days in the market usually follow big dips in the market. So what happens with the average investor, they end up bailing out when it gets ugly, and then they're not there for the bump back up, and that's where they lose out. So on average, the average investor makes a little more than about half of what the S&P 500 does.
And if we can, there's no way of knowing for sure, is this going to yield the return I want, but are there things we can be mindful of?
Right, and it takes money out of the stock market to put it in more protected positions to provide you with like a guaranteed cash flow, which is usually insurance-based products, and of course compliance, backed up by the claims-paying ability of that insurance company.
Well, it's also very important, and we can't thank you enough for shedding some light on it.
Always a pleasure.
Jeff, great pleasure to have you here. If you would like even more sound advice, terrific stuff from Massey and Associates, just be sure to visit roadshow.com for a link to their company's website.